Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Just want to give you some comments for today's grain trade, today being Friday, June the 5th. Let's just start with the landscape first of all. Pretty significant rally in the dollar today on the heels of both good jobs data as well as a continuation of problems with Greece. You notice the euro down dramatically and, dollar was very firm. So we'll move on to corn. To me, the anticipation that corn, wheat, and soybeans would rally, given that the dollar had moved dramatically higher during the pause, was slight. That was proven to be immediately incorrect. Corn rallied, wheat rallied, and soybeans rallied instantaneously on the open. But here's the deal. In my humble opinion, corn is simply following wheat. Absolutely nothing has changed with the corn fundamentals. You're still hearing a lot of guys saying they're really impressed with how the crop's looking, especially this early. Long way to go, but at least that's what you're hearing. So corn market was able to get over the 64, 64 and a half level. We traded up there to 67 and a quarter. Problem is, as soon as you saw the wheat market calm down, corn was immediately walked back lower and was actually 2 or 3 ticks off the low going into the close. So for corn, you got to watch for the progress or the conditions, next week. And really, I think corn is only going where wheat allows it to. Moving to the wheat market, another big rally. Realize we opened last night and there was a consistent seller. Had the market 6.5, 7 lower within the first 2 or 3 minutes of the open. We were able to bounce back and then rally about a dime on the open to go up to that resistance between 530, 535. Realize until we close over those levels, this is still just a huge trading range between 470 and 530. So sellers came out, realized as well we had a weak corn spread at $1.67. I think that attracted some selling attention. And we were initially able to sell the wheat market down. It came back, looked like it was going to firm up, and then it gave it up again. Realize strong dollar, we're only making it more uncompetitive globally, and there's quite a bit of trading going on. The funds are in charge, and you saw how they treated it on the open last night, and you cannot look at today's close as a good thing. Now, it's still just a trading affair. If we're weaker on Sunday, won't be surprised to see the market bounce again, but nothing has really changed. And unfortunately for corn, until the wheat market figures out if it is indeed trying to bottom or if we are going to roll over and have another leg lower, corn's going to just follow suit. Moving to the soybeans as well, rallied even with a strong dollar. Keep in mind the July-December meal spread was strong again. You initially had strength in the July-November bean spread. So we take the front month beans up to 950, 952, and we were able to get through. Remember, there's big orders at 925. There were yesterday. They sold a few there today as well. We trade up to 27 in the November beans, and that was it. Personally, I felt like bean oil was also doing some leading. Bean oil was able to blast through 35 in the July. Realized that particular product's rallied at least 200 ticks throughout the last couple of days. Once that calmed down, beans as well headed lower. So at this moment in time, we've bounced for November beans. You're looking at a neighborhood of at least a 30-cent bounce off those lows. Everybody knows the fundamentals are pretty bleak, and it was not a good close for either the corn, wheat, or soybean markets. Other than that, we'll just see what the condition is next week. Let's keep our eye on the wheat market if we're going to be trading corn. And also, guys, keep in mind, wheat options are not particularly liquid, but that is a way to get some exposure to this thing. Keep in mind, you had a market that's on at least a 50-cent rally. Obviously, those put options were crushed, and it gave you some opportunity for some small trades in there today. So thanks for listening. Again, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Have a great weekend.